Next item on consent. On conduct.
Yes. Item 6C, adopt a resolution accepting the city's comprehensive annual financial report and the Measure A fund report on compliance for the fiscal year ended June 30th, 2018.
All right, Director, this is your first audit CAFR for us, and I know you are as excited as we are, so you are going to move this one forward and bring it to a different element that City of San Bruno has yet seen.
Wow, it's a lot of expectations there. Thank you, Mr. Mayor. Okay. Good evening, Honorable Mayor, members of City Council. My name is Keith DeMartini. I'm the Finance Director for the city. It's my pleasure to present an overview and management's response to the annual comprehensive financial report for fiscal year 17-18. I'll kick off the presentation by providing a brief overview of what makes up the comprehensive annual financial report, or what we more commonly refer to it as the CAFR. I'll then turn it over to David Alvey. He's the city's audit partner from Mays & Associates, who will present an overview of the audit and the highlights of the financial statements. And then I'll come back and discuss some highlights of our general fund reserves, some internal controls, explain the importance of the CAFR, and then a request to council to adopt a resolution of receiving the CAFR and the Measure A report. So the city's independent auditor, Mays & Associates, completed the audit of the city's financial statements for the fiscal year ending June 30th of 2018. The Finance Department prepares the financial statements in the form required by generally accepted accounting principles. And then it's also required in the city's municipal code that the city prepare comprehensive financial statements and review them with you at least once a year. The CAFR is comprised of 4 major sections. The first is the introduction, which is just some general information about the city, a letter of transmission, so on. And then the financial section provides all of the detailed financial data, the statements, the report from the independent auditor, and management's discussion and analysis analyzing the fiscal year's activities. The notes to the financial statements are equally important, as it provides a lot of really helpful context to the statements themselves. And then the last section is a statistical section, which provides a broad range of operational, economic, and historic data about the city and its activities. The Government Finance Officers Association established a Certificate of Achievement of Excellence in Financial Reporting back in 1945. It encourages local governments to go beyond just reporting minimum information and really encouraging municipalities to be very transparent with full disclosure of information in achieving that goal. The city's CAFR is evaluated using a really extensive checklist with multiple criteria ranging from depth of context, readability, and formatting of the financial information. The city of San Bruno has received this award in 8 consecutive years through fiscal year 16-17, and we have submitted an application for this fiscal year 17-18 CAFR as well. So now I'd like to turn it over to David Alvey, our audit partner, to present specifics of the audit process and an overview of the financial statements.
Great. Thank you, Keith. Good evening, Mayor and members of the City Council. Just to kind of piggyback off what he said about the GFOA award, I'm actually a GFOA CAFR reviewer, and it's very difficult, one, to go through the checklist with a CAFR, and it's very difficult to deny CAFR awards for cities that don't achieve that level of excellence, and I've done that before. So the fact that you've had it for 8 years in a row is a great thing to have. So we're going to go over my part, the agenda. We're going to go over just an overview, the audit results. We're going to go just a really high-level review of the financial statement highlights, and then we're going to talk about my memorandum on internal controls and required communication, also known as the management letter. So I'm the partner with Mays & Associates, and my job is to really come out every year and audit the financial statements and make sure that they're presented fairly for you to review and to make your decisions on. I mean, that's really what you should drive your decision making on, of how much money we have and what our revenue resources are like. And to kind of jump down in the weeds about the audit process itself, is we came out in April 2018 during our interim phase. And during that phase, we're looking at internal controls and segregation of duties as it relates to financial reporting. We don't like it when somebody has custody of physical assets and does the record keeping, because those physical assets could disappear and the record keeping could be modified. Anytime we have any kind of conflict like that, there's got to be some kind of mitigating factor, some kind of review, some kind of checks and balance. And we verify those and document those to how they report in financial reporting to make sure that we can rely on the data we get at the end during our final phase when we come out and actually look at the balances. And our audit is a risk assessment audit. So we assess a risk coming in, and as we gain information and as we test and find things and maybe don't find things that work, that changes our risk, and our audit plan constantly changes throughout the year. And it starts with a brainstorming session, which is kind of interesting. That came out about 7 years ago, where my whole audit team gets together, from the associate straight out of college to the partner, and we go over line by line through San Bruno's financials and identify which areas are risky and how we're going to test those areas. So basically, no audit plan is the same, which is kind of keeps it interesting, at least on my side. Our audit was conducted in accordance with generally accepted auditing standards and governmental auditing standards, and those are national standards that we have to follow. So the bottom line, as it is our audit opinion, and that's page 1 of the report. And with the other audit opinions, those technically are the only pieces of this CAFR that my firm owns. And I'm pleased to say it's an unmodified or clean audit opinion, highest level of assurance that a CPA firm can give an entity. So congratulations, you passed your audit. And it's really a testament of sound financial practices and good internal controls. So that's good news. So just looking over kind of a high level of your government-wide statements, I highly recommend, if you don't read anything of the CAFR, to read the MD&A. It's an executive summary of how the numbers changed from previous year to current year, and it's just a good high level, and I think it's only about 15 pages long. But right now, your net position increased $13.6 million to $126 million at the entity-wide level. So that's good. So that means you had more assets than liabilities, because that's how we get to net position. And when we see that tracking up through the years, that's a good sign for an audit standpoint, sound financial practices. And actually, you increased despite an increase in your net pension liability of $11 million to $89.2 million. So if you remember right, about 3 years ago when we implemented Government Accounting Standards Board number 68, we put that net pension liability on the books. That comes every year from the CalPERS actuary. So we get that information from CalPERS, and the big piece that changes that is the discount rate. And CalPERS was pretty aggressive in their discount rate and has actually been lowering it for the last couple of years, and has continued to go lower, so that in turn will increase your net pension liability. Okay. So looking at the general funds, now we're at the fund level. Again, your assets over your liabilities. You can see that in 2018, you had $32.6 million in total assets and only $4.4 million in total liabilities, to give us that net position, or that fund balance, of $28.2 million. And that was an increase of $3.58 million over last year. So that's great tracking up as well. And the big increase there was in cash and investments of $3.3 million over 2017. So looking at revenues and expenses, again, in the general fund, a couple things I want to highlight here. The taxes is mostly sales tax and property tax, and that tracks up just a little bit as the economy moves up. The big jump here was in the fines and forfeitures of the $6 million increase. That was the PG&E penalty from the CPUC. So that leads us, again, our total revenues increased $7.5 million over last year. And looking at expenses, overall, you can kind of see an increase of your departmental expenses, and a lot of it has to do with what I said before about that pension liability increases and booking those pension expenses. One thing to point out is the public safety increase is also due to an increase of 3 officers, I believe. So that kind of spiked that a little bit. For the capital outlay and debt service change, you see that you had quite a bit of activity last year, not so much this year. That had to do with your capital lease with JP Morgan for your fire truck and fire engine purchase. So that's the big change from last year. Okay. So going back to that one. So again, you had your revenues of 49.8 million, and then your total expenses of 46.2 million, and that gives us the increase in the general fund of the 3.58 million. So looking at your enterprise funds, so these are your business type funds. The water and wastewater increased 4.4 million and 5 million respectively, and those were due to 2017 City Council approved rate increases for your water and wastewater. The storm water actually decreased by almost $500,000, and that's due to the defunding of a couple of capital projects that were previously funded, and those were the Crestmore Canyon Detention Basin improvement and the City Park stormwater improvement projects, and also giving back transferring back out money excess on the Mission Avenue Box Covert repair projects that was done with extra money left over, and they transferred that out. So that's why you see that decrease in net position there. For the cable fund, we actually have a comment on this on the memorandum on internal controls, but I'll go over it. So the total net position was at a negative $12 million for June 30, 2018, and that's a loss, an operating loss of $2.5 million over previous year. And there's been some, and we'll go over the management comments on this, but there's been some headway on that. I mean, the loss was due to investment in infrastructure, and also just, you know, your expenses exceeded your revenue in that fund. And I know staff has plans to look at higher margin plans with bundling cable and internet, and also some other plans, and to try to decrease the expenses in that fund. Okay. So the memorandum on internal controls is my communication to the City Council about what we found during the audit. And there's three categories. Material weakness means that something material can flow through the internal control process at San Bruno and not get caught. It's really bad. We have none of those. The second is significant deficiency. So something significant can flow through the internal controls, you know, looking at the financial reporting and not get caught. And we had none of those. And then other matters is just anything that I want to bring to your attention. So we did have one internal control comment just about, again, breaking apart that record keeping and the custody of assets in regards to payroll. Having a different person being able to adjust pay rates than to run a payroll. So we kind of want that segregated, usually an HR function on one side and a finance function on the other. And then the comment about the cable fund being that it's had about a $2 million loss, operating loss for the past 3 years, and currently has a $12 million deficit balance. So we just want to bring that to your attention and highlight the need to focus on that. And with that, I'm going to give it back over. And I'd just like to thank your finance staff here, Darlene as well. You guys have a great team. We work a lot with different cities in this area and special districts, and you guys have a great department here. Thank you.
Thank you, David. So now that David's presented an overview of the audit and the financials, I just want to discuss a little bit more about our city general fund reserves and a response to the auditor's internal control items that he mentioned earlier. So this slide right here provides a summary of our general fund reserves as of the end of June 30th, 2018. We do have a reserve policy that City Council adopted back in 2013 that basically establishes the reserve policy for the city with the goal of maintaining a target fund balance of 25% of budgeted general fund expenditures. The city has been steadily approaching to that goal over the past number of years, and we were able to achieve that goal at the end of fiscal year 16-17, and we again met that goal at the end of fiscal year 17-18, which is a really great thing. The general fund contingency fund retained an additional amount of about $600,000 above the target of $1.5 million. That's item number 2 on that table. And that was retained there in order to pay for ongoing budget enhancements that we don't yet have a dedicated revenue source for. So again, a very fiscally conservative approach to managing the reserves. This is a very healthy reserve structure for the city at this time. So speaking about some of the internal controls that David spoke about earlier, I wanted to provide a management's response to those items. The first one being the item regarding segregation of duties to the payroll processing. That was primarily due to some attrition with staff, both on the human resources and finance teams. We have since resolved that issue. We have clear delineation of segregation of duties of human resources staff inputting pay rates when employees are onboarded or there might be some personnel action. And the folks on the payroll side, on the financial team, do not have access to do that any longer. So we have clear security access, roles, and permissions in our financial system. And that payroll staff is now reviewing the work of the human resources staff when they're processing payroll. So we have clear segregation of duties, and we have more formalized bi-weekly audit process of payroll changes each payroll period. So we feel that, staff feel that we have addressed the internal control issue that the audit has identified, and so it shouldn't be an issue going forward. And with new staff, we are developing more structured, comprehensive policies and procedures that staff can review and continue to update going forward. And then as far as the cable interfund balance, as you know, we are conducting an in-depth analysis of the cable department's operations, product offerings, and the future business plan. This will include the examination of services and revenues with the goal of offering higher margin services. Council did receive an overview of the San Bruno Cable Enterprise back on November 27th, 2018. And since then, staff have been working really closely in developing a business plan and financing options for the potential fiber to the home project. The plan will plan to be presented by council in the coming weeks, and it will include revenue and expense projections and a repayment plan back to the general fund. So we hope to address it that way. So although the CAFR might not be the most exciting document that you'll ever read, I do want you to know that it does serve a very, very important purpose. There are many people that do read it. We, of course, offer it to City Council so that you, at least on an annual basis, get to see a comprehensive view of the city's financials. Members of the public may use it to read and learn more about the city as well. It's really important when the city intends to issue debt, crediting agencies and other institutions will review the city's financial statements to assess its creditworthiness, to see how secured their financing is to us. The city has received very high credit ratings in recent years, partly because of the strong financials and its reporting. And other financial institutions and external auditors will also review the city's CAFR as it pertains to their specific support or audit work that they may do. The external auditor also provided a report on the compliance with the San Mateo County Measure A funds for local transportation purposes between the city and San Mateo County. This is a required annual report. The city did comply with all of the reporting requirements with that measure. So let's see. So my request to council tonight is to accept the city's CAFR and the Measure A fund report of compliance for the fiscal year ending June 30th, 2018. Before I take any questions that you might have, I do want to take this opportunity to recognize and thank the city's accounting manager, Darlene Wong, for her dedication and her leadership with all aspects of the CAFR and the city's accounting operations. There's a great deal of work that goes into this document. In her 14 years of experience and expertise, we are in a much better shape because of her and her hard work, so I just want to acknowledge her tonight. So with that, I'll open it up to any questions you may have. Thank you.
Questions by council? Irene? You're it.
I was hoping there'd be ladies first, but it's okay.
They've said you can go first.
Okay. I will comply. So the pension, right? We've increased 11 million, and just curious of how are we going to address that? Because I know that's not what we're here for. We're here to approve this, but it's something that it bothers me, and just wanted to hear what our plan is.
Sure.
City Manager.
Thank you. So absolutely right. Rising pension costs is one of the significant fiscal challenges that we face. What I would say, out of all of the fiscal challenges that we face, and be them long-term liabilities or infrastructures, while the pension number is large, the good news about the pension number is because we participate in CalPERS, we pay our annual actuarial determined contribution. And what that is, in finance speak, it's paying your full ARC. But we're paying our full mortgage payment every month, every year. And so over the long-term horizon, and the CalPERS actuarial reports show that in the 25, 30-year mark, we will pay down that unfunded liability. But CalPERS is taking a number of actions to increase the amount that cities have to pay. One of the great things about municipal employees is that we have access to great health care. Well, that also means that we're living longer, and so the projections for what it takes to fund the public retirement system throughout California is increasing. And so those challenges will continue to face us. How we have to address those is making sure that we have the necessary resources to pay that annual mortgage payment. And that annual mortgage payment is going up, and so that's part of the conversation that we'll be looking at with fiscal stability. That is part of the conversation that we'll be talking about with revenue measures and finding other ways to have more money to pay the ongoing operating costs. And we're a service agency largely with people that provide services, and so that is our greatest asset, and it's also our greatest expense.
Sobering, but thank you. Yeah, it's something that we're going to deal with, and then we have a somewhat of a plan in getting this financial sustainability project going. So I do thank you for that, and thanks again for alluding to the other issue brought out here was the cable fund, and we're looking forward to that business plan. The one thing that I just wanted to be able to find, because it's really, when I compare page 76 from the public employees, and then when I try to compare the safety side, the pages are so different. So I have some difficulty obtaining your 11 million. That is how much our unfunded pension liabilities. I was wondering if you could quickly provide the math on how that 11 million is obtained. Is that okay?
So the 11 million quoted in the presentation is the year-over-year change,
right?
Not necessarily the balance of the unfunded liability, which would be referenced in the notes and on the financial statements. It's 120. Yeah.
So I'm looking at page 76, and the net pension liability. It says the net change was for the non-safety went up 5.2 million. There on page 76.
5.2 million. So, Councilmember Medina, I'm just trying to find where you have the 5.2 million on. Is it on the table in the middle of the page?
Yes, where it says net changes.
Okay.
The third column.
The 5.2 million on the last column. Got it. It's right here.
How did we come up with this 11 million? I don't know.
This is for both safety. This is for safety. Or miscellaneous. Yeah. So this is the net change of the miscellaneous plan only, not for safety.
Right.
So increasing from 39.4 million to 44.6 million. It's because there are different types of plans, and that's what the safety is the cost sharing. The safety plan is the the miscellaneous is the cost sharing? Is the cost sharing plan, and the safety plan is what was it called? The agency one, and so the safety plan is more expensive than the miscellaneous plan.
Got it. No, it's okay. I just wanted to be able to see what page to get those numbers to add up, and I had a really hard time doing it. So maybe I could stop by someday
I would be happy
in the
to.
office and you could show me
I'd be
and not
happy
take
to.
up everybody's time. So I'll be happy with that. If that's
Sure.
okay with you, sir?
We'll provide you with the answer.
Okay. All right. Thank you. That's it.
Really quick, you talked about the payroll element that was brought up by the auditor, but that you've quickly gone ahead and done that and had that segregated, which I think is good, and it's the right aspect. Was there any other segregation of duties that needed to be looked at, done, and when it came to the cash that comes in over the counter or other economic until it is deposited? Because obviously summer comes up, we have cash over at the pool, cash at the rec center, we have the cashier in finance, we have the city library, and I know when I was asked, as now the mayor, and I didn't know that was part of the process, is there anything that you have of concern? And the former manager, Jackson, and I, when we were interviewed. And so that was one of my questions, do we have secure and steps and segregation of duties from the time we accept any type of monies until deposit?
So that's a great question, and part of our audit process I didn't really talk about is we have to talk to you about fraud and risks that you guys have to tell me of how to go look. And the previous city manager actually did identify the pool as an area of not concern, but just maybe uncertainty of how the process worked. And we actually went out there and did tests, follow the dollar from the customer's hand to when it hits the bank to when it's recorded in the accounting system, and we didn't find any problems. But you got to remember that we're looking at it more for a fair financial reporting. So we're looking for larger amounts, and we're doing testing, we're doing sampling. So to say that everything's completely 100% fine, unfortunately I can't say that because we didn't test 100% of the transactions. But for the items that we did test and the systems that we did review, we didn't see any issues other than the ones that we mentioned in the report.
Okay, and then Mr. DiMartini, yes, please.
If I could just follow up on that. In the first few months after I started, we did do sort of an internal review, if you will, of cash handling. So the finance department staff implemented a number of improvements. Number one, we implemented a remote service scanner where we scan the checks for deposit, and they transmit and deposit directly into the bank. So it's more secure, so it's less hands actually handling the checks. It deposits quicker, so the money gets deposited into our bank account quicker. We get to earn more interest over time, and there's not the lag and delay. We're planning to roll that out more broadly to more operations across the city as well, like the cable department, for example, which handles quite a number of checks as well. We implemented a new policy and procedure. We documented all of our policies and procedures and are testing against that. Little things like we're requiring like a locked canvas bag when transporting cash and check from office location to office location. So it's a more secure method of transportation. So things like that add to and enhance the internal control environment of the city.
Great, and I also appreciate that we are starting to document protocols and procedures, and they're being implemented, as well as when new staff come on, there is something tangible that they can go to, reference, and we can all keep on the same path. And I want to thank you again, as I have before, because I think at times what we have done is we've looked outside the box, and I think you're looking for effectiveness and efficiencies to streamline, not have so much paper, and trying to just expedite as well as use time efficiently. So thank you.
Yep. Great.
There's a resolution on this. Do we need two, or is it one resolution will take care of both items?
I think one will do. We usually do
Will one do? Or do we need to do Measure A separate?
One moment.
Okay.
Just one.
So do we have any action from council?
I will make the motion that we adopt the resolution accepting the CAFR and the Measure A fund report for the fiscal year ending June 2018.
Second.
Motion made and second.
Councilmember Davis?
Aye.
Councilmember Medina?
Aye.
Councilmember Salazar?
Aye.
Vice Mayor O'Connell?
Aye.
Mayor Medina?
Aye.